Yo. It's 9 p.m. on a Monday, February 10th. Do you know where your kids are? Probably smoking weed. Welcome to week 3 of our options selling accountant, Dr. Dumb Money, certified idiot. We had a great day selling options today. P&L for the day is $167. Whoo, we're making people's salaries this past week, just literally printing salaries. It's insane. With a $7,000 account. I mean, this is outrageous. I feel like I've been getting really lucky. I made 4 trades today. Apparently I still had margin from Friday. I got an email on Saturday that said, if you don't show up at the flagpole by 9 a.m. CST, we're going to spit roast you with Gordon Ramsay. I closed out the 25 strike AI for $600 in collateral back. And so that was fine. But you might be wondering, why do I still only have $22 of option buying power? I think a better question is, why do I have no self-control? So I have Shopify now. I have a cash secured, a secured push cash, Shopify's got earnings this week, and I wanted to capitalize on that. $87 credit for opening Shopify. Its earnings are on tomorrow. $87? You want to make $87 in overnight, basically? Yes, please. And this is the crazy part. It's at $119.91 right now. Let me show you. Let me pull this up on TradingView. Actually, TradingView makes shit fast and go slow. So it makes my MacBook lag. Would you believe I'm gaming on a MacBook over here? I am trading on a MacBook. I don't have 15 monitors. Absolute disgrace. Shopify at $119. I bought into this at like $120. So obviously I chose to go towards the high end of the spectrum because I am on the spectrum. My strike is 16.5% below the current price, and I got $87. So that is why I was like panic closing things today. I closed a bunch of crap because I just desperately wanted to open up a Shopify trade. I love earnings. I love earnings. I'm going to start. I need to start doing more earnings trades because this shit is insane. So that's what I'm going to try and focus on the rest of this week because we've got some more earnings coming up. So we'll see. If anything is closable tomorrow, maybe I can do some more earnings for later in the week. Probably not, though. I know Shopify, SMCI, Lyft were my big ones. So in order to make that Shopify trade, I need like $1,100 in collateral. So I closed the AI to get out of the margin call. I was like, great, we got $600. I'm just going to sit on that cash. Never sit on the cash. Closed my Wolf put, closed MSTU. I actually rolled MSTU. We were 85 cents in the money, but I rolled it for a net credit of 20 Robux because we had sat on it for enough time that enough extrinsic value had decayed that we were still green on the trade. I did for the same expiration. So we had like $55 of theta left, extrinsic value, but I still rolled it to the same date, to the 7.5 strike, to really help us out and make sure we don't get assigned on that one. We might collect $20 off an 11-day trade on MSTU, which is great. We're not in the money anymore. Like, I freaking love selling options. It's like taking candy from a baby. You know, it's so easy. A Dr. Dumb Money could do it. Celsius is the only thing that was red today, still shitting itself, and I am shitting myself. But that's what sucks about taking these far out trades. We still have 39 days to expiration on this. We're not in the money yet. We still got $1.68 left, but we could very swiftly be in the money on Celsius. So I'm a little nervous. One last thing I want to show you is my spreadsheet. This is where I like to do nerd stuff. I like math and like working with numbers. It's a lot of fun for me. So I have a bunch of trash on here. I've made all of these tabs myself. As I was experimenting with options over the past like 3 months, trying to figure out what worked, what didn't work. Diagonal ratio spreads. These were credit spreads. ROI calculator when I was being extra nerdy. Ironfly, iron condors. I saw somebody selling spreadsheets on YouTube and I thought that's kind of shitty. I wonder if that actually works because you could pause this video right now, screenshot it, put it in ChatGPT and say, hey, can you recreate this for an Excel doc? And it'll do it. So I don't know. If anyone's interested in this, let me know. I can give it to you. But this is how I'm going to start tracking my trades because it's just kind of complicated and constipated to do it on Tasty. So I put in all the trades that we've done so far, at least the ones this week. But if you see anything in here that you think can be improved, please let me know. I'm always open to suggestions. I've got a return on collateral column and then a return on collateral annualized. So let's take a look at two of the trades that we closed today. Wolf. We had this one open for 13 days. We sold it for 47 bucks, closed it for 24. So we net $23. Our collateral on that was 250 bucks. So our return on collateral was 9.2%. What is that annualized? It's 258%. God damn. Who said selling options is slow? You hear all these like option sellers on YouTube saying, yeah, we're aiming for like 4 to 5% on the high end a month. And like, I don't know, I haven't discovered the pain yet, I guess. I assume that's coming. Just haven't gotten there yet. And it's just so crazy. Look at all these. Like this one's 730%. Oh, that's the Shopify one. Now you see why I wanted to take that one. Lastly, I also changed a few things on my dashboard here just to make it make a little more sense in my brain. So we've still got our P&L open. So since we opened the position, this is our profit and loss, and it shows you a percentage. We've got our P&L for the day. So how much we made for that day. Cost, since we're selling, it's not a cost, it's how much we collected. So the cost is our credit column. Extrinsic, this is the time value on all of these. And you see the total is $654. So if all of these expired worthless, we would collect $654. That's what that is. Really important to look at this when you're selling options. Because if I want to roll like my Celsius one, I still have to fight $133 worth of extrinsic. Days open, time since we've opened the contracts, days to expiration, how many days are left on the contracts, capital requirement. This is a really important column. It lets you show, this one's a really important column showing me how much collateral we've got tied up in this, in these positions. Earnings at, I just added this one today because I think this one's really helpful. Let's just save some time going back and forth looking it up. But it's a good way to keep track of earnings release plays. So I know it's the 10th today. We've got 1, 2, 3 this week. We'll see. Will we cook or will we be cooked? Find out next time on Dragon Ball Z. Then our theta. Theta is really cool. This is our time component as well. If extrinsic was our total amount of money in the trades, if we waited for them to expire, theta is how much money we collect per day for each position. So in total, we're collecting $87 a day just on time. This is on a $7,000 account. That's crazy, man. What if I had $70,000? If this was a 70 grand account, would I be collecting 870 bucks a day? Nah, this is stupid. Like I said, I'm waiting for the pain. We're going to get shot down. I'm sure of it. But for now, we're riding the wave. And then our extrinsic return on what the fuck is that again? Return on risk. Yes. Yeah, so I think it's actually just ROC annualized. Hello, it's the morning of February 11th, and I am once again crushing the... Shopify had earnings this morning, and at 7 a.m., it crashed 9% to $109, still $9 above my strike price. And then in an hour and a half, it rose green, still pre-market, opened at 122 or something. And I mean, as soon as this opened, I watched this bar fly up to 100%. And it was the most satisfying thing I've seen all day. Insta-fill, instant $80 overnight. It's literally the only thing keeping this portfolio green today so far. And we've got our $1,000 of buying power. So we've got some room. I can sit on this cash and have some room in case anything bad happens. But I probably won't sit on this cash. Why do I have no self-control? So we pulled up the $12,000 spreadsheet. Feel free to buy it from the description. Entered in the info where the fuck am I? $87 credit, 1 day open, closed it for $7. Our return on capital was 7.4% in 1 day. If you annualize it, that comes out to 2,683%.
Goddamn.
Absolutely smoked the ops. I think I'm going to actually do DraftKings again. I know I like got rid of my DraftKings, I think last week, but it's got earnings this week on the 13th, and the collateral's really low for it. It's $380. You can get 38. That's a 12 delta, 88% pop. It's looking pretty solid. It would be an 11% down move to get hit. Okay, we got a fill at $29 of credit, and that's all I'm doing today. I'm not doing anything else. I'm actually going to sit on the $600 of buying power. I refuse to be in margin call like 3-4 days in a row. All right, Tuesday, February 11th, after market close, we got cooked today, unfortunately. $190 in the hole today. Love that. Literally gave back all the gains we made yesterday. This was green at one point. We were green 40 bucks. Yeah, really glad we had that Shopify win because this would be even more red had it not been for that. But this was almost entirely AI, just shitting its pants. As usual, capital requirement is going even higher on AI. You know what? I wonder if that's happening because we're getting closer to the earnings date. So a couple earnings happened. Remember I was thinking about DoorDash earlier? Well, that came out and I would have won. I would have won another $100 on that collateral. Oh me, oh my. But here I am, a brokey, degen, because I'm holding too much damn AI. I couldn't take that trade. That pissed me off. Lyft earnings also came out, and those were clapped. $12.94 in the hole. However, our strike price is only $12. So we are still winning on Lyft. As long as it doesn't crash at market open, we should be even more green tomorrow, which is great. Might close that one in advance of this Friday, though, for whatever profit we're sitting at, just because it's kind of close to the 12 mark. Wednesday, February 12th, after market close. Just our quick update for today. P&L for the day, we were green, $62, whereas Celsius continues to plummet. I'm honestly considering just cutting Celsius, even though we're still not in the money and we still have 37 days left. I'm considering cutting it just because I feel like I could be putting this $1,000 in collateral to better use elsewhere, like, gambling on earnings releases. Clearly the safer choice. Thursday, February 13th, after market close, we made 700 trades today because I have an addiction. P&L for the day is a cool $98,000. $98. We are steadily approaching that $8,000 of net lick. That would be great to see when we finally hit $1,000 of positive net liquidity. That will be dope. And we did that pretty much in a month. I mean, this is the third week we're working on here. So I think we could very well see $1,000 by the end of our fourth week here. Is that 14% per month? Sheesh. Damn, that's pretty good. First off, probably the most questionable one I did was closing Celsius. We were not in the money. It actually went up today. The stock moved up like $1 or something. We were up 25 bucks on that. I mean, still down like 60 bucks overall on Celsius, but I didn't want to wait another like 35 days with $900 of collateral in Celsius. I figured that money was better spent elsewhere. Just considering all the success we've been having on all these earnings plays, I feel like if I just keep doing that and hopefully nothing awful happens. Celsius right here. We open it for 65 bucks, close it for 125. That was a negative 6.4% return on collateral, minus 145% annually. So don't do that multiple times. I think the real lesson learned from that one is I tried to play a game of chicken against a falling knife. So I guess that's technically our first loss. I could have kept holding it. And you know what? We might have been totally fine like next week. We could be green next week for all we know. But I want to do some earnings plays. Next up, I closed DraftKings and Palo Alto a day before earnings. They just had their earnings releases. I would have won on both of them as well. So had I not closed these out tomorrow, I would have collected an additional $30 in total. But I figured I'd just take my collateral back and open up some new trades today because they were both at 80% profit, and I didn't want to risk an earnings play on just at 20%. So DraftKings and Palo Alto right here. Palo Alto, we closed out for 110 net premium. DraftKings, $22. The annualized ROCs are absolutely insane. We had Palo Alto open for a little bit longer, so that was only 286%, 287% only, versus DraftKings was a cool 977%. I've seen better, man. Next up, we opened 3 new positions today, all earnings plays, because again, I have an addiction to seeing 4-digit annualized returns. We opened up Trimble, ANET, and Wayfair. All 3 of these have earnings next week. Okay, so here are the returns on collateral. 11.4% for ANET, 5% for Trimble, and 8% for Wayfair. Okay, Trimble is currently trading at 73.66 at the close today. We got the 65 strike, which is here. That's an 11.7% decrease from the current price. These ones, however, are next week. Some are Thursday, so a week from today. So there is time to come closer to my schmike price. ANET currently trading at 109.75 at the close today. We have the 95 strike, which is a 13.5% downward move from the current position. The nice thing about this one is we're on the lower end of the Keltner channel, so I could see this potentially popping up higher even before earnings. But like we always say, what the hell do we always say? Technical analysis is bullshit. Lastly, we've got Wayfair, closed today at 47.59, and we have the 37.5 strike right around here. It's a really strange number, but that is a 21% downside move. This is such a nice area of support. 1, 2, 3 touches at this level since November. So, dude, it's Valentine's Day, 11:47 p.m. As per my usual time to record. My wife literally hates me. Red day, unfortunately. Minus 76 bucks today on the P&L. It almost entirely came from AI. Unfortunately, we were 78 bucks down on that one today. It fell from like 33 to 31. Rather unfortunate, but we have 2 weeks left. So if we can survive just 2 more weeks, this is earnings. Which is why I think the collateral requirement is so high now. But I'm hoping maybe we can close it right before earnings, assuming we're still above 30 or at least close to it. I know we got pretty good credit for opening this in the first place. Another bit of a loser today is ANET, which has been falling since we opened it, unfortunately, but it's not like I can predict these sorts of things, so whatever. We actually we're like losing on ANET, but gained on Wayfair. This thing jumped up 3% overnight. At open, this was in like 61% profit in one day. Now it's just 35%. I was considering closing it at 61%, but I never know when I should or shouldn't. It's only got 7 days left to expiration, so I figured I might as well just wait and see if I can suck out this little extra bit of extrinsic value. Otherwise, we made 3 trades today. We bought to close Apply Digital, SoFi, and MSTU, all 4 gains. Let's pull up our handy dandy spreadsheet. Backpack. Spreadsheet. All right, for a $10 closeout fee. That was 7.5% return on collateral, annualized 115% gainer. Okay. SoFi. Return on collateral was just 4%, but annualized, it was even better than Applied Digital because we closed it out so quickly. 162% annualized gain. Well, just watch. I'm going to blow up this account somehow. It's going to happen. MSTU, we closed out for 10. Number of days 8. Oh, that's right. Okay. And then expiring in 1 week. Shoot. Okay. This is gonna be some crazy ROC annualized here. But yeah, I guess I only had this open for 1 day. So 1.3% return on collateral. Really bad. 487% annualized return. I don't know. I'm really liking just cash secured puts. Screw the wheel, man. I don't need the wheel. Just give me some puts. Okay, so going into next week, we've got 3 earnings plays. We've got Trimble, ANET, and Wayfair. Really no movement with Trimble, so we're just going to wait and see what happens. We've got 7 days left on all 3 of these. Earnings dates are the 18th, that's Tuesday, 19th, Wednesday, and the 20th, Thursday. Okay, here's the dashboard for today. We were down 1%, which sucks, but for the week, we actually are green. Started out the week at 74.73, 74.70, something like that. But 74.73 to current price 76.47. That's, what is that, like $177 gain. So that's awesome. 177 bucks this week. What is that percent of the account wise? 2.4% for the week. That's solid, man. I mean, just that this week, if we were to continue this trend, that's a solid 10% per month. I think what really carried us this week was all the earnings plays, because we actually had some serious red for a little bit here. Like this day, this was actually red. I don't know what happened there, but If it weren't for all those earnings plays, I think we probably would have been around neutral, if not red this week. So I'm really liking cash secured puts on earnings. I have not been crushed myself yet. Solely crushing the ops. Year to date, we are $700 up. This is just P&L for opening this account. Basically, it's $700 because we started with a little less than 7,000. That sums it up. Thank you for watching the video. If you liked it, like and subscribe. And I will go into this weekend easy, knowing I am still collecting your dad's theta.